Hello traders, Cousin Vinny coming to you from theclosingprint.com, November the 8th, 2020. In this edition of your weekend video newsletter, we'll talk about the indices, all of which gained markedly last week, with the Nasdaq 100 exceeding all expectations, nearly up 10%, followed by the S&P 500 and the IWM up 7.32%, and 6.88% respectively. We also saw a strong performance from big tech. While the bond stock ratio turns higher, HYG and junk are bullish. S&P 500 is bullish, giving us a longer term signal. Tick cumulative for both the Nasdaq and the NYSE show that institutions have been buying over the last week, technically forecasting higher prices ahead. As we entered the October 27th through January 18th period during the election cycles that have seen gains during election years going back to 1950 of at least 4%. Roughly half of the election years going back to 1950 gained at least 5%, and 2 years gained double-digit returns. The US dollar also moved lower last week, which is helping the emerging markets. Those outperformed by 7.2%. In addition to commodities, which were impacted by a lower dollar by moving higher, gold broke back above the 50-day moving average, and copper is continuing its bullish trend. We also saw the heat map improving last week for the S&P 500 sectors and the international markets. We'll also look at some IBD 50 themes this week of a little bit smaller list, only because many on the IBD 50 are way overbought and could come in a bit. The stocks that are shown here are set up and could continue higher, provided the indices follow through. We also look at some MarketSmith Growth 250 and some stocks from the Blue Dot Scan in cyan. We have Bukowski with a CPI signal half green since November. First week with a 92% reading, that's bullish, with 2 bearish patterns, 24 bullish patterns, and 283 patterns waiting for breakout. Indicators this week, we have 16 bullish, 3 neutral, and 1 bearish to start the week. Bottom line, we are bullish with the S&P 500 gamma giving us a 3557 resistance level. That's 355 on the spiders as well, with support at 340 and 3400 respectively. Starting off with the spiders, we broke above a trend line that goes back to the all-time highs at 358.75. That extends out to the present period. On Thursday, we moved above that level. RSI managed to get back above 50 with a strong performance from growth stocks and the S&P 500. On Friday, we produced a doji. We are above volume by price support. Major support at 340 with major resistance at 355. That's open interest and a major absolute gamma level. Momentum is bullish. Stochastic move from oversold to overbought. We could embed like we did back in July and August. We'll watch for that this week. And MACD crossed with the week showing above average volume, producing a very bullish candle, with RSI responding accordingly on the weekly time frame as well. MACD is flat but turning higher. While the Nasdaq 100 produced the strongest performance on a weekly time frame, we did produce a very large bullish candle. RSI is rising. We have MACD crossing back up. We have MACD below the signal line trying to move higher, and stochastics is turning from 50. While we keep in mind the election years, with 1960 and 1996 the strongest double-digit performance, with 14 of 17 of those years since 1950 advancing more than 4%. Small caps also had a strong performance last week, with the Russell 2000 up 6.88%, reversing off the moving averages, retesting this triple top high, most likely in the weeks to come, with MACD above its signal line and rising on above average volume last week. With 16 out of 20 indicators bullish going into this week, we're also starting off with one of those indicators bullish. VIX is performing its green, which is telling us to look for higher highs and higher lows, while breadth has been improving as well, hitting an extreme last week and reversing back to a positive, giving us an opportunity for the cycle to turn more bullish going into January, as both the New York Stock Exchange high-low index continues, in addition to what we see in the New York Stock Exchange advanced decline in the middle panel, both making new highs. Looking for a follow-through this week as confirmation that the bulls are still in control. The bond stock ratio is also bullish. The ratio between the UST 10-year bond and the S&P 500 shows equities are outperforming and in favor, which is prompting yields to move higher. We have higher highs and higher lows on the 10-year yield. That's bullish for equities. In previous occasions where we've had reversals off the lows, continue with higher highs and higher lows. Back in 2012, we saw a 12-month period where price action continued higher for 66% gains in the S&P, in addition to what we saw back in 2016 and through 2018, where we had an increase of 37% the last time the 10-year yield started moving higher, producing higher highs and higher lows on a weekly time frame. We also saw performance in higher risk assets like junk bonds and high yield corporate debt, both producing very bullish candles to end the week, forecasting better things to come as we move away from volume by price support into an area of little supply overhead. So there will be very few traders left to sell to them as price action moves higher. That's bullish for equities. Forex pairs continued to move higher as the dollar moved lower. We saw the British pound still in a range, grinding above its 21-day moving average, looking for a follow-through. With the US dollar moving lower, of course, that's going to affect emerging markets and international ETFs, marked by a breakout in the emerging markets last week as institutions positioned themselves ahead of the crowd, looking for follow-through in the emerging markets. Commodities performed well with the US dollar moving lower, which forecasts better things to come in the economy, marked by a breakout in gold above its 50-day moving average, still in a range, but more bullish than it's been over the last 8 weeks or so, which was followed by crude oil. We had strong performance last week, so this is bullish for equities. If we can manage to get crude oil back in line and above the $42 to $43 a barrel mark, we would look for more bullish follow-through in the indices as a result. We'll be focused on the strongest sectors going into year-end, with the S&P 500 gaining more than 14%. The bottom 6 sectors underperformed, so it's approximately 255 companies on the S&P 500, or slightly more than half, belonging to sectors that underperformed. So we'll be looking for the strongest sectors to invest in, with our primary focus on consumer discretionary, technology, industrials, looking for follow-through in financials, with materials, communications, and healthcare near their highs. Performance was also seen in the international ETFs as well. You can pause the video and look at these closely, but you had performance in Argentina, Chile, Brazil, looking for follow-through in Canada, Ireland, Italy, Japan, Germany, France, and Brazil. Looking for follow through in many of these indices and ETFs, followed by a reminder that if you don't want to pick individual countries, you can always pick a good international fund like the Vanguard International Growth shares that we have in our portfolio to capitalize on the improvements in international ETFs and indices going into year end. The IBD 50 this week is marked by strong performance and a strong showing by many of the names on the list. So the fact that we have fewer names showing up in the opening monologue is solely based on the fact that many of these are overbought, could come in a little bit. So we're looking at the stocks that are still strong, that look the best for a follow through, like Alibaba, which got whacked in the previous week because of the Ant IPO being rejected by the Communist Party of China. Apparently, institutions picking up discounted shares with stochastics oversold and rising. It's a pretty good setup. If we see a follow through this week, look for Alibaba to outperform. With my guess being a gap up on Monday, we're still very close to the 21-day and 9 EMA as of Friday's close. While stocks like Applied Materials being very strong performers last week, they are a bit overbought, so I wouldn't want to chase a stock like this. Look for a little bit of a flag and a pullback. It's the only reason why this didn't show up in the opening monologue. We saw above average volume. That's telling you that institutions are buying. I'm just a little reluctant to go after this full force until maybe we see a little retest. If this keeps going, so be it. If you're in it, looks good as technology outperforms. I'm just looking for opportunities that are close to the value area, the 21-day moving average. Like big lots, retail's been doing well, consumer discretionary. RSI is rising through 50. I could see us breaking above this trend line overhead into an area of very little supply. Like to see volume pick up. Stochastics is oversold. This is the setup that I'm looking at. Forecasting closes in the upper half of the daily range until this gets up into the 80 zone where it gets a little bit more problematic. So look for follow through this week in stocks like Big and Dollar General. RSI is rising here as well. We're going to go back and retest the highs, it looks like. MACD and stochastics not oversold, but not overbought either. Following through, has a bit more upside before it gets overbought. Perhaps we test the highs again this week. While stocks like Digital Turbine, APPS, trying to break out, we're near overbought, just showing the strength of trend as RSI rises, volume increasing, showing institutions have been picking up shares. I'm just reluctant to chase it unless you're already in it. Looking for a flag or a little handle and then a breakout. Stochastics maybe recycles a little bit, just like it did here at the end of September before it went off into this run to the highs. Even though RSI was pegged near highs, it was just showing strength of trend as RSI moved above 70. So we're looking for follow through in Apps Turbine, just knowing that it's a little bit overbought. Additional stocks in the consumer discretionary sector, highlighted by some of our new members. William was in this one last week. I think he's still in it, looking for a follow through. RSI is above 50 and rising. Volume has been increasing, and stochastics is yet to get to overbought. So we're pretty close to a buy signal still, as it rose last week markedly. Maybe a little flag resistance at this level at 147, and then it takes off, or maybe it just breaks out this week. Regardless, it's showing relative strength, looking for a follow through this week. Facebook and many of the others on the IBD 50, the thing I'm watching here are little nuances like we're nearing highs. RSI is starting to level off, maybe turn back down a little bit, while stochastics is overbought. We need to see it maybe recycle. Doesn't mean it will, it just means those are the things that I'm looking at, giving us a little bit smaller list to choose from. only because we were so strong last week. So it's not from a lack of interest, it's from a perspective of what is RSI telling us, what is price telling us. A little pullback here would be advantageous on floor and decor, capitalizing on the new and existing home sales trends lately, with lower interest rates and residents moving from overpopulated states like New York, New Jersey, California, in addition to stocks that are showing strength like Franco-Nevada. From the IBD 50, with that gold breakout above the 50-day moving average, it's possible that Franco-Nevada will continue to retest the highs. It's getting a bit overbought. I'm just watching how RSI is turning. I'd look for a little flag first. Volume is increasing, showing institutions have been picking up shares, and stochastics a little bit overbought. So I'm looking for a little bit of a flag or consolidation before taking a potential position here and still capitalize on the strength in gold. Fu2 is another stock that's showing relative strength. What I'm looking at here is stochastic just moving off of a buy signal, volume picking up on Friday. We did close on a doji. It's giving you a better opportunity if this does pull back a little bit before breaking higher and potentially retesting the highs. RSI suggests there's more upside. While Lamb's research, a good representation of what I'm looking at here is we have a strength of trend, but we're very extended from the value area, the 9 and 21 day moving averages. So I wouldn't chase it up here. If you have it, I'd be taking some profits off into strength, looking for a little bit of a pullback first. Volume showing institutions have been picking up shares, stochastics overbought. So this is the kind of setup that while it's very strong going into last week and ended the week on a bullish note, I just don't want to chase it going into this week. So I'd rather look at a stock like Lowe's, which is pulling back to the 9 and 21 day moving average. RSI is at 50. Stochastics moving from a trigger level at 20, rising, looking for a MACD cross and a follow through. Institutions were picking up shares Monday through Thursday. A little bit of selling on Friday. So I don't want to chase it, but it's coming back and retesting the break above the 50-day. That's a good sign, and buyers stepped up at the end of the day. You can see those wicks noting that they bought near the lows of the day, finished in the upper half of the daily range. Nvidia, another example. This could follow through, very strong, looking for continuation with the semiconductors, trying to break out. RSI's rising, suggesting higher prices. It's a little bit extended, so you have a little additional risk if you try to take a position first thing in the morning on Monday with stochastics overbought. We could level out here. Volume is showing institutions picking up shares. I like Marvell better from that perspective. And one of the things that we saw with MarketSmith Growth 250, stocks showing relative strength. In Marvell, we saw that as well. Following through, stochastics has yet to get all the way back up to the highs and cycle in more of a consolidation look to it, with RSI continuing higher, suggesting we could see maybe a little follow through, but I wouldn't chase it. Bottom line, looking for better opportunities while still looking for follow through in the semiconductors. Looking for strength in the payment processors as well. PayPal near the 9 and 21 day, buyers stepping up Thursday and Friday. You can see these wicks indicating where they picked up shares at the low of the day, closing in the upper half of the daily range. That'll make stochastic continue higher, forecasting a continuation of that pattern, closing in the upper half of the daily range. So look for follow through in PayPal, as well as the other payment processors like Square following through, accepting Bitcoin, buying shares as well, with MasterCard initially rejected at the 21 day, looking for a follow through this week with RSI potentially rising, MACD crossing. Same with Discover Financial, nice trend, looking for a follow through. Capital One looking good as well. Servicenow, another stock showing strong performance last week. I just don't want to chase it. Looking for a little flag for an entry potentially as stochastics hits overbought again. Even though MACD is crossing and volume is above average, I'm watching how this is tapering off as price action makes new highs. While semiconductors like Taiwan Semi look strong, Stochastics still overbought, MACD crossing, volume increasing. This is probably just going to break out and follow through this week, though I will be looking for a little bit of a flag potentially for a better entry with a potential repeat of what we saw on Friday. Here's your A with the stock breaking out end of day. Viva Systems also had a strong performance last week, just above the 21-day moving average. Note the wicks under the candles, buyers stepping up at the low of the day, RSI is above 50, volume increasing, and stochastics not quite overbought yet, so this could follow through and retest the highs pretty quickly this week. If the financials follow through, we're looking for Virtu Financial to follow through as well with them. Volume increasing last week, MACD's turning, and stochastics rising through 50. We're also watching pharmaceuticals for follow-through. West Pharmaceutical on the IBD 50 looking for a break higher, even though stochastics are a little bit overbought. MACD crossing. We'd like to see more volume. And workday to finish up the IBD 50 that we're looking for follow-through this week, with stochastics turning from oversold, MACD crossing, volume picking up on Wednesday and Thursday. We're looking for this retest to get bought and break out into Monday and Tuesday early in the week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. Make sure you check out these MarketSmith relative strength names. They have nice setups as well. In addition to the blue dot scan, stocks that are showing relative strength with their RS line at highs, forecasting a potential breakout in the short term. And the Dow Industrials, which we highlighted, the ones that look really strong for the week ahead. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. Have a great weekend, everyone, and I'll talk to you soon. Take care.